The S&P 500 bounced yet again off the 4848 level. This is the level that I provided in the last weekly prep video, if you remember from over here. We broke above it on January 22nd. It acted as a key support, as you can see 2 times here, and had continuation off of that. And then eventually we retested it after FOMC on Wednesday, and we had a daily close right about on this level, a gap up the following morning, and it ripped to the skies right after that. Not only did it continue up to my minor supply zone we have here that I also referenced in that video, we were able to get above the supply zone on Friday, which prompted, as you can see here, a major squeeze. Since this is a very bullish setup, being able to get above such a supply zone after having such a bearish close 2 days before, a lot of bears got trapped right in this daily candle we had here because it seemed like a bearish daily candle, but because of this gap up the following day, we had a gap bait setup. That's how I like to call it. And we had continuation upwards from there. So a lot to talk about in today's video. One, just based on the strength we've seen so far, the short term continues to be a bid to the upside. And unless we can get below this red box in the near term future, it will continue to go up. Even if we go 5,000, 5,100, as long as we stay above this level, those prices are possible. As crazy as that may sound, I realize that may sound crazy because we've been going up since October 27th, but this is your pivot going forward. A breakdown below 3,900 is when shorts are a more viable setup, but as long as it can stay above, then dips will continue to get bought as we've seen so far. So that's the basic premise of where we are structural wise. And then another thing I do want to mention, just based on the close from Friday, Apple's daily candle looks very, very bullish. Not only is this a huge pickup candle after a substantial gap down from earnings, but also there's a ton of volume behind it, also mainly because of earnings, but still there's a lot of volume on this candle, on this pickup candle that went back above the uptrend. You can see here, this is the upwards trend line, starts from back here in August of 2023 and it continues up. We broke down below it a couple times, but for the most part, you can see that it's been respected, like over here on the daily candle, over here is respected, over here is respected, and then again, over here it was respected. So going forward, if we were to have a pullback to around this level early on this week, personally, I'd look to dip by that because of such a substantial bottom that we had. I'd only look for short-term upside on it just because we do need to be aware of how high up the S&P 500 is right now. Again, as long as it stays above my red box I have here, I expect it to continue to bid even higher. However, in terms of other big cap setups, we do still need to be careful and likely take more shorter term setups like 1 to 2 week holds max, just because it is very risky to have a little bit longer of a time horizon when the S&P 500 is this overbought at the moment. So regardless of that though, if we do have a retest of around 183, 184-ish, I would look to add some type of short-term long off of here. And again, we do need to hold this upwards trend line going forward because a daily close under, then you can start looking at some more downside. And this is basically just a good risk reward setup that has previous strength from Friday, like I just said, as you can see here on this daily candle, plus that volume aspect. If we were to retest around 183-ish would be perfect around this upwards trend line, I'd take some type of a tactical long position for further upside to around 190, 194. That's one of my pivots. And this is really good risk reward because you only have about, $1 to $2 of risk, just based off of about an hourly to daily candle. I'd probably decide just depending on how price looks for the day, but you could have an hourly to daily candle of risk and you're looking at about 1 to absolute max of 3 points of risk for potential of about 7 or 8 points of upside. So that's good risk reward. Plus we have the other aspects that I just shared here that shows strength. Also, I'd like to see flow start to pick up for it. We didn't really see anything unusual based on the flow for Friday. A little bit earlier on in the week, there was bullish flow. You can see right here, but nothing too crazy overall. A lot of these were August and June expirations, so nothing in the short term. They also didn't have too much premium behind it, at least for Apple. And then also they didn't have that far of a strike in terms of out the money. So I didn't see anything unusual. It's possible this week we start to see something like that. Confirmation bias, if that were to be the case, especially on a retest of around 183, which would be my ideal entry, like I said earlier. But I'm looking at this one for potential setup this week. Whenever you see a candle like this after a substantial gap down, that tends to be a precursor to at least some short-term continuation. So if we were to get a mini pullback here early this week, I'd like to add it for some type of a short-term setup as well. And another thing I do want to talk about is Google, because this was an interesting setup from Friday. I personally didn't take it, but we did just about retest this downward trend line. Now, if you were to draw this slightly differently, and if you look over here, for example, I drew it a little bit through this daily candle, so I didn't draw it on the top. And the reason I did that is because there was a resistance over here. So I made sure to connect it to this resistance. And you can see here it acted as a resistance on November 22nd. However, if you were to go to the upper end of this, where it should be, you can see this created a perfect bounce setup for Google, and a very strong bounce setup at that, after it's a little bit of a drawdown from earnings that it had earlier on the week. And this was a perfect convergence of not only this downward trend line retest, but also the golden pocket in terms of Fibonacci. So we had a perfect retest of the 0.5 retracement, plus, of course, this downward trend line and a huge bounce off of it. So this is a very strong candle. I'd actually argue this is even more structurally sound than Apple. For example, even though we're still well below where it was before earnings, versus Apple is now just about back to where it was before earnings, but still, this is a very bullish candle, and there's a tradable setup based on this candle as well, where if we go to the 50-minute chart, I can start to show you. You can see over here, if we were to have a dip, for example, and we're able to buy the dip, let's just say 141, because that's right around this 0.618 retracement. If we were to add around 141, I'd look at risk of around a close below 140 on the hourly as being my risk in this case, which is only about a buck of downside for potential of a lot more upside. I'd say high 140s for potential bounce, just because of how strong of an upside move we had from Friday and how strong of a daily candle we also had coming out of, yet again, that downward trend line, as well as the golden pocket convergence. So this is a very minimal amount of risk for a setup, because in order for it to continue with its new uptrend that it potentially started on Friday, it needs to stay above roughly 140 on the hourly. That's in this consolidation range here. As long as it does that, it's going to continue with its uptrend until this breaks, of course. So any dip back to around 141 is amazing in terms of risk reward. It doesn't have to continue like I want it to here. And if it doesn't, then it's about a point of downside risk, like I just said, for potential of a lot of reward. And these are amazing setups when you just base it on risk reward. In this case, again, there's still some structural aspects that can certainly influence the bullish bias, like I just shared earlier. But if you can find 1 to 6, 1 to 7, even 1 to 8 trade setups, those are amazing, especially on big caps that are going to be a bit more liquid, not only in the options chain, but also in terms of volume throughout the day. So it's a little bit easier for these setups to play out. So I personally like this one if it were to dip back. Again, I don't know if it's going to continue from here, but structural wise, it looks pretty good right now, and the risk reward is there. So it's something that I'd be interested in entertaining if we did pull back just a little bit from here to enhance that risk reward aspect. Thought I'd share some of my insights on this as well as Apple in today's video, just from, again, that risk reward perspective and technical perspective. Again, it still is crucial that we look a little bit more at the short-term side of things for trade setups, especially for longs, because yes, we are overextended at the moment on the S&P 500, but I'd say we're more so in the safe zone for longs as long as it stays above 4,900. Under here is when you're going to start to see a little bit larger of a pullback start to emerge. So this is what I'm looking at as the deciding factor, as I mentioned in the first part of this video. As long as we stay above, I'm still looking for more tactical long setups. Haven't pulled the trigger yet on a short setup yet. Haven't seen a reason to. As you can see here, we just continued to the upside, even in the short term and long term, since October 27th. But regardless of that, these are some of the setups that I'm looking for this week. Of course, if you can see a nice convergence with order flow on some of these, which I haven't checked Google, but yeah, it doesn't look like anything crazy from last week, and actually had very light flow. This is all of last week for Google, which is barely anything. So if this can start to pick up, that's always a good confirmation bias signal as well. But regardless, I'll see you guys in the next video.